Okay, guys. Sometimes at the end of a long day, and it's been a long day for me today, I contemplate the conversations I've had, some good, some bad, and then gather my thoughts with a cup of coffee. Why? Because we all know Scruffy likes his coffee. And he does. Stay to slurp. I've been talking all day. And I've also been to the dentist, which was traumatic. I'm not a lover of the dentist. But I'm going to use the dentist as kind of an analogy. Because what I've been thinking about today is, have you got the right to trade in the first place? You see, if you're a dentist, or any profession for that matter, a solicitor, doctor, even a gas engineer, you're all incredibly well paid. But you certainly didn't learn that craft in one day. In fact, it takes years. You know, gas engineer, you're probably on a 3-year apprenticeship. Doctor takes 7 years, solicitor could be 3 or 4 years in law school, dentist 4 or 5 years in dentistry school. You have to do this. And each day you gain a little bit of experience. And as you do the job, you get better at it. Now, trading is no different. And funny enough, if you're pretty good at trading, the salary is roughly the same. You know, a good retail trader can earn as much as a doctor can. It's not out the realms of possibility. And let's be honest, you see me and you see my account. So something for you to pay a reference to. And if you haven't been here before, do subscribe, turn the bell icon on and go through the catalogue. Look at the Vanguard series. Look how well it does. And that's based on steady trades of understanding the markets. Now, this is where I'm asking the question. Do you have the right? You see, most people think they can watch a 15-minute video, see an indicator that says, oh, point this way, because they've clicked on this glossy thumbnail going, this indicator works 100% of the time. Bullshit. Why? Because it's based on the past. We don't know what's the future, so it can't work 100% of the time. And all an indicator does is give you an indication, clue in the name, of what may happen, not what will happen. But if you've been experienced and you've been around the markets a long time, you start recognizing things like surges in the market, how that surge plays out, where it stalls when it comes into key levels. And key levels are very important because they're the only thing that really tell you what's happening in the future. Why? Because the charts are normally self-fulfilling prophecy. And if it's happened before, it'll happen again if you know what levels to draw. But most people don't. They live too low in the charts. They live down in sort of 5-minute charts when really they should be looking at a daily. All these different elements. Now, in my squad, to give an example, I have a learning path and I'm pretty rigid with it. And some people think I'm a right git. And I'm not. I'm actually doing them a favour and I'm trying to show them the right way. But if you think for a merry second that you're going to learn this craft in 2 weeks or a month, you literally are in la la land and you've got no right to be in this industry. And if you're looking for freebies all the time, again, you're not really going to get very far. You've got to follow a structured path. And that's what I try to give the guys. And the idea is in the first month, you just look at the modules, take notes, understand it. And I mean, I do get guys come in and they binge watch it in a month, in a weekend rather. And they think, that's it. Monday, I'm ready to go. No, you can't absorb that amount of information. I mean, at the moment, I've got 53 modules. It's a hell of a lot to take in. And I know they skip bits out. And I know this by the way they talk to me. Because everything that they need is there. So they'll say, oh, I've done this and I want that. Like, well, no, you've missed a module out. No, I haven't. I've done it. Well, there's a clear instruction in there and you haven't done it. So I know for a fact you haven't done it. So either you've ignored it, which, why would I bother? Or you've missed it out and you're lying to me. So again, why should I bother? So there's that sort of element to think about. But the idea is of the modules, it's to get you to understand the heartbeat of the market. Now, once you've done that, you've got to earn your right to trade. And I wouldn't throw real money into the markets. Or if you are, do it very small. And I'm a big advocate of doing challenges. And once you've done your modules, the next part of the puzzle is to do a challenge of some description. Now, the 30-day challenge is what I set the guys to do. And I'll tell you what it is. It's 30 days, one trade, smallest position possible on one asset. And you look at that every day for 30 days. Okay? Now, the idea is not to really trade. The idea is about discipline. You've only got one shot. Most people fail because they go, oh, well, I didn't trade yesterday, so I took 2 trades today. Well, that's not quite the rule. It's one shot a day. All right? If it takes you 3 days to get a setup, fine, it takes 3 days to get a setup. The one shot also slows you down. It means you're not going at it like a machine gun. You've got to be methodical and think about what you're doing. So there's that. And if you fail at the end of the month, in other words, you've ended negative, but you took less than 30 trades on one a day, it's not really a fail. As long as you understand why, it just means, well, okay, I need to tweak a few elements. What the process is about watching a chart grow organically, because you'll be working your way up and down the time frames. You'll see how that chart develops, how you watch a Bollinger Band go through its 4 states, watch RSIs go from top to bottom, use stochastics the same way, understand how the ATR is affected throughout the month, because the ATR is important, because when there's a lot of volume, the ATR expands. But then if it starts decreasing, that means there's a change on the horizon because people are being a bit cautious. But you'll get to see that every single day by looking at it. But if you look at one chart one day, another chart the next day, and then another chart the day after that, you will never see the heartbeat of the market. You will only ever see a finite snapshot. And that's what I mean by earn your right. Now, a lot of people can't complete the 30-day challenge because they overtrade, they're too eager to go to market, and they take on trades that angels would fear to tread. In other words, try and take on the open at 8 o'clock. Ludicrous. At least give it 30 minutes. But they just want to be in the market. And they always talk about the big trade that they've just won. But what they don't tell you is the parts where it all went a bit tits up. And it's inevitable. We all have errors. I have plenty. I've got loads. But the one thing that I do have is I have controlled. In other words, it can get out of hand and think, something, enough's enough here. So I'll get out. Why? Because I know if I let them run on long enough, I'll be crucified. Learned the lesson the hard way. Got this battle scars to prove it. But would I have learned that in the first week of trading? No, I wouldn't. I would just sort of throw the dice and see what happens. I wouldn't manage the trade. And that's a big difference. Throwing the dice, there is no management. But if you go in with a solid plan, you're fine. Did it this morning with the guys live. Yes, the market pushed up on the DAX, but at the time that we were looking at it, it was ready to drop. And told them, said that's going to come down 30, 35 pips. Yeah. No, I can't touch it. It's going to turn. Not in the next hour, it's not. Down it came, did its job. Then it turned round. So both were right. But one was managed. And that's because I only took what the market was willing to give me by what I could see. And it's all done through a process. Now, I do have tools that help me. But unless I've been through the market conditions, I understand the heartbeat of the market, the tools that I use are worse than useless. In fact, they amplify a bad decision. They don't amplify a good one. And that's why if you go through the modules and you go through a 30-day challenge, your reward is the tools because they'll speed up things. They're basically just a notepad, is what they are. But if you can't read the 4 conditions of a Bollinger Band, can't read the MACD fully, don't understand the difference between a broad stroke and trigger when you're looking at charts, you have got no chance because it has to be accurate. And the only way it'll be accurate is if you can read the chart in the first place. So ask yourself the question, have you earned the right to trade? Do it yourself. Get yourself a pen and paper. Write down 1 to 30. Do a trade. Put a note to the side of it why you did it. And then do it for 30 days. And then see what your results are at the end of the 30 days. And I bet you'll learn something about those markets. You'll learn to understand what the overextended candles are, what the flares are, what the double tops are, all these different elements that you hear. But you would see it in real time. And do it, because it's far better than backtesting. Backtesting is a waste of time. Backtesting only shows you that there's a high probability that the system you're using may work. Is it accurate? No, because you're always looking at perfect conditions. If you're forward testing, your emotions that's taken over, it's your discipline that's taken over, and it's your management skills that's taken over. That's when you learn. And let's be honest, 30 days for a lifetime is nothing. Anyway, cherish your thoughts, and as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you on the next one.